Today is Monday, April 2nd, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Alan Bush, ADMIS Senior Financial Economist, and ADM Investor Services Grain Analyst Mike Niemiec. Mike, let's start with the grains this morning. What was the market's take on last Thursday's important USDA reports?
It's one of the more important reports that we get throughout the whole calendar and marketing year. We found out that the quarterly stocks that we got for the corn, wheat, and soybeans are quite adequate, but the trade was more focused on what would happen with respect to plantings going forward. So I think that the trade kind of enhanced that, particularly in the beans, where they find out that the bean acreage is going to be down from versus a year ago, maybe above or below trade estimates, and also the fact that with Argentina having problems this year, that the bean crop is going to be of importance for this coming season. As far as the corn goes, the acreage was also down versus a year ago and also versus the trade estimates. And I think also there too, the trade is going to go and try and say what's going to happen with the spring weather and what's going to happen as far as carryout numbers going for the 18-19 marketing year. So that's where the buying power came in on Thursday.
So as we move into the first trading day in April today, what do you feel will be of the greatest importance? Is it weather now?
It'll be of weather, and it's still real early. The U.S. right now, if you experience it over the holiday weekend here, it's been quite wet down in the Delta. It's been dry out in the western sections of the hardwood winter wheat belt, and it's also been kind of cold and snowy, wet up here in the upper Midwest. So with those acreage numbers that we got from the USDA, people are going to be piping in what those acreage numbers are going to be as far as supply and demand tables going for the 18-19 marketing year. However, we're not going to get those numbers until the May report, not this April report. And the thing about this numbers that came out on Thursday was the fact that it's grain stocks. We've got enough. The Brazilians got enough. Argentina's got enough. We're not running out of grain now. It's a situation that's down the road.
I know you follow the Commitment of Traders report closely. Can you please comment on the latest in regard to this report?
So the Commitment Traders report that came on out, they're still sizably net long the soybeans and the soybean meal. What will be of importance there, I think, is the fact that as we go forward in here, is the Brazilians, and even if the Argentinians do have a crop, are they going to take away from our export demand going forward? Which, in sense, what happens is that the quarterly stocks numbers, we found more beans. So we're not running out of beans right now. So that's going to be of importance going forward, is because the trade has sizable net longs in both the beans and the meal. They were sizably not long in the corn. Now the corn is a little bit better story going forward for the fact that we got animal numbers, we've got export demand going on, but we can't get too ahead of ourselves as far as the corn go prices, because we did find out more quarterly stocks, and that's going to put a little bit of a reins in any type of sustained rally.
China. Let's talk a little bit about China and the potential trade war tariffs. What are your thoughts regarding the effect on grain with China?
Alan probably has a better handle on it than I do, but as far as us being, as far as grain traders go, you don't want to hear stuff about pork. Pork means corn and soybeans for us, as far as soybean meals goes for us, as far as usage goes. And then we also found out that maybe over the weekend they were talking about maybe curtailing some of the U.S. or raising tariffs on U.S. ethanol imports. So what that happens is that corn demand may a little bit suffer as far as trying to get the product moving. And so the whole picture in here right now is that we do have limitations on the upside as far as price projections going forward. We started out real strong this week, and now and on Friday and on Thursday we've retracted a little bit here as when we first walked on out. And I think that the trade's going to go and try and keep an eye on what's going on with the weather, but to get the trade restrictions, what's going to happen with the demand. And once again, we're not running out right now as far as what that USDA report came out on Thursday.
Still plenty to watch in this global market.
We got a lot of moving points.
Alan, last week the Labor Department reported initial weekly U.S. jobless claims fell to the lowest level since January 1973. How does this potentially affect Fed policy?
Well, by itself, it would encourage the Fed to be a little more aggressive in raising rates. But that just being one data point, I think the Fed is probably going to spend more time analyzing what's going on with the global trade situation. And with that backdrop, the Fed may be a little less aggressive to see just how this plays out. So it still appears that the Fed is on track to raise rates for a total of 3 times this year. In fact, there now is an 89% probability that the Fed will raise at the June meeting.
I know you've been watching the gold market. 2 weeks ago, gold futures broke out to the upside, but last week futures gave most of those gains back. What is your outlook for the gold futures now?
Well, it's been a rather erratic trade in the gold the last couple of weeks, and even today we're about $14 higher. Ultimately, I think the precious metals will trade higher, and even today the silver market's putting in a very good performance, up over 35 cents. So precious metals should continue to advance. We still have the inflation influence. From time to time we have the flight to quality influence, so the trend is higher for both gold and silver.
We talked a little bit about global trade, the potential trade war
Right.
with China. Finally, Alan, global trade tensions have done some damage to the bull market for stock index futures. Have the stock index futures topped here?
I think that they may have topped only temporarily, especially when there's so much focus on the trade situation. And in fact, I think the trade issue may get worse before it gets better. But I think ultimately these problems will be resolved. And once they are, it will be the relatively low global interest rate environment that takes the stock index futures back on its upward track.
Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or our Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.